All right, so we're recording. Perfect. So yeah, just to kind of reference back, we're going to discuss top-down analysis, and this is basically the concept of looking at the overall market from a bigger perspective. And I tend to look at the weeklies and the dailies, and then kind of go down to the smaller time frames to get an overall picture of what's taking place at that given point in time. Now, when it comes to top-down analysis, you're also looking for two things. You're looking for key levels and support and resistance. Now, support and resistance and key levels are terms that are thrown, collectively, so you could use them interchangeably. But key levels holds much more weight when it comes to price action and specific levels in the charts, because what a key level is a point or a price point where price was one support and then it crossed over, and then price was now resistance. When you're talking about resistance, price has never broke past that point. It's just resistance. It taps it, it comes down, it taps it, it comes down. And then you also have support where it just bottoms out, goes up, bottoms out, goes up. But it tends to not break that level and then retest it. But when you have an area where it's resistance and then that point is broken, or and then price taps it from the bottom end, and then it becomes support. Now you're talking about an area that now is a key level. So you want to focus on these levels when it comes to future movements, because price tends to react in the same manner that it did from past history. So just kind of jumping into the charts. Well, before I move forward, do any of you guys have any questions? If you do, just type them in the chat box, and then as we go along, I'll make sure to answer those questions. All right, so let's just look at a solid pair. This is a solid moving chart, Euro USD. This is a solid moving pair. All right, so right now it's set on the hourly time frame. As we can see, it's a downtrending market, and the reason why we know it's a downtrending market is because of two things. We got these lower highs, right? This one's like a little anomaly. But we got these lower highs, and then we also got these lower lows, right? The market is downtrending. So it's going down this way. So we know that from an hourly perspective. Now, that's not enough for us to just take an entry in the market. We want to also have some type of confirmation from a larger perspective, a larger time frame. And that's where top-down analysis comes into place. So what I like to do first is come to the weekly. So we look at the weekly, and we want to just kind of view the chart as an overall, an image, just to gauge, how the movement was. As we can see, when it first started off, we were having this like solid uptrend that was just continuously uptrending for year after year after year. And now we're starting to see some more downtrending take place, some more downtrending, a little bit of consolidation from 2015 to 2016, a little uptrend from 2017 to 18, and now we got this downtrend that's taking place up until this point. So we see that, but that's not enough. Right? So what I like to do here from this point, when you're looking at this chart, is instead of looking at the candlesticks, I switch it to a line chart. And the reason why I start here is because this kind of gives you like a clear image. It cancels out all the noise, and it gives you a clear image of what price is doing. Like all you see is just lines at this point. It's just lines going up and down. All right? You got some questions? Perfect. So from this point, what we want to do is we want to look for key areas. On a weekly, you don't want to mark out just every point that was just hit. You want to look for just key areas that were support and key areas that were resistance. And just by looking at the chart, I can tell right here where price is. This is looking like an area that was once support and resistance, right? And the reason why I'm saying that is because here, if you look here, price floored out. If you look here, price was kind of going above it, tapping it, coming below it, but it was consistently tapping it, coming down, tapping it, moving along it. Now it's kind of hovering, right? And then if we kind of zoom to this other end, and we just kind of want to look at what was price doing, we start to see a little bit of this, price tapping it, coming down. And then you want to kind of bring out the measurement tool and see how large were these swings. Were they like massive, 1,000 pip moves, or were they just like a few hundred pips, So right here, we're looking at 200 30 pips. Right here, we're looking at about 500 pips, right? Let's go to this side over here. We got movement about 600 pips. Movement to the upside about 1,000 pips. So we know with Euro USD, you know, it's not something like a GBP USD that moves 100 pips. Hey Q, could you mute your microphone for me, boss? Appreciate that. Thank you. All right, so we know that, you know, this tends to move a little bit more slowly. It's not as rapid with the movements, right? So let's just mark that right there. And then what we're going to do next is we're going to come back and look at the candles just to see how price is reacting at those levels. So if we come here, we start to see some wicks, you know, at this level. We kind of zoom over here, see what's going on. We saw price was uptrending and then it consolidated at that level. And then we had a strong bullish candle to break past that level. Same here, we had some wicks, consolidation. Price started to come above it, tapped it, went up. You know, there's a lot of just kind of confirmations to let us know that, all right, this level is, you know, key because it was resistance at one point and now it's acting as, you know, support. So we'll go ahead and mark it. Now, what I like to do is make sure you want to color coordinate your lines. So it doesn't matter what colors you choose, as long as you come here in a text and then you type in what it is that you're looking at. This is a weekly line. So we're going to type that in there. So now this line right here, you necessarily don't have to take it off your charts, like ever, unless price, you know, moves, you know, 1,000 pips up or like 2,000 pips. And then now you're in a whole nother region. Then you could kind of take them off and just play the game the way it is. But because this is from a weekly standpoint, price tends to follow these areas. As you can see, since 2003, price has been, you know, respecting this area. So we'll go ahead and just leave that there. Now, we got the support. We found support. Now we have to find resistance from a weekly standpoint. Still on the weekly. You know, we don't switch over to the daily. We're still looking at the weekly, right? So as we can see, we saw these major movements, right? So I'm seeing this happen right here. And I'm also seeing this happen right here. So I want to mark this area right about here. And why am I doing that? Because price tapped, came down, broke above it, came below it. The price also came down. It made a small gap, came up, price came down, broke below it, came back up. We're seeing some consolidation in this area, some more consolidation in that area. So this is kind of telling me that, all right, this is like a solid, this is another key level. So now let's look at the candlesticks just to see what the candlesticks are doing at this area, right? So as you can see, price breaks above it, comes down, breaks above it, comes down. You see what I'm saying? So it's respecting this area, you know, as an area of support right now. So, but let's move it down a little bit just to, you know, confirm it a bit. And then we're seeing, you know, these type of patterns right here. You know what I mean? These morning stars, essentially, bearish engulfing. You know, there's so many patterns that are taking place on a weekly standpoint. And another thing I want you guys to pay close attention to is how many candles you're looking at. You're right here in this area, you're looking at 1, 2, 3, 4, 5, 6, 7 candles. This is 7 weeks worth of data right there. 7 weeks of just price respecting that level and not breaking above it or breaking below it. From an hour perspective, those lines, you know, like the quarterly theories, when you're looking at the quarter points and such and looking at previous levels of market structure, that works when you're placing your trades. But these key levels are significant because of the amount of time that was spent in this area, right? So let's kind of, now that we have this area, let's just jump back to this area just to make sure that, you know, the candlesticks are respecting these areas. We got respecting there. We got some wicks pushing it back up. We got a little gap going on here. Then we got resistance, broke out above, retested, broke below it, you know, try to retest but couldn't. So now we got this going on here, right? So these are 2 solid areas, and we're just going to leave them the way they are. 2 is good enough, as long as you got a support and a resistance from a weekly perspective. All right? So now let's look at the daily. So we're breaking it down even further. So now we have more price action taking place. So same situation. We're going to come here, look at the line charts, right? And as you do this, like I highly recommend, you know, you guys just going through and marking up charts. Even if you're not going to trade, just do this so that you can start training your eye to see this stuff, you know, without having to do this. Or you could just start doing it on your own and kind of gauge these key levels, right? So right here, I see a key level because price tapped it, came down, came below here, tapped it, went back up, broke down below it, came back up, tapped it, hovered. So let's kind of zoom back a little bit further to see what's going on. It's tapping. There's a little gap there, right? And there's three variations of, you know, a mark like a support line or resistance line. One of them being a tap where price just taps it and then goes up. There's also the gap where there's like a little small area in between that support or resistance line. And then you have the overlap where price kind of goes below it, but then it shoots back up. So it's not like a, you know, a cookie cutter format where it's like, oh, this is the only way to do this. You know, there's three variations of this format. So as we go back to 2006, we're seeing a little bit of a gap going on there. We see some consolidation in this area, or broke out, tapped it, came below it, and then broke out. So we're seeing a lot of that. That's good stuff. So then let's look at the candles and just zoom back. So we're seeing here, respecting it. Before we keep moving, let's change the color. Let's just choose magenta. Daily. All right, so now we're just zooming back just to see what price was doing around that level. So we got a lot of taps. We got a lot of consolidation. You know, a little overlap taking place. We got variation candlestick pattern. You know, this strong bullish candle followed by, you know, a bearish candle and then second bearish candle. This is like a 3 inside down. We got wicks, you know, respecting that level. So we got a lot of that taking place. So that's a solid resistance level that we would say, support key level essentially, but to the upside. So we got those levels. Now we could look at support, but because the weekly is acting as support right now, we have a tap here, an overlap here. Essentially, this is where I'm looking at floor. Now, if price breaks below it, then I'm going to come back to the charts and find another support area. All right. So we'll leave the charts the way it is. So now that we have these areas marked up, before we move along, let's look at the overall trend. Let's see what's going on here. So we pull out our trend line. We see this right here. Let's see if this has no relation to where price is. So we know that it's not an uptrend that we're necessarily looking at. So let's look at this from this perspective. All right. So price is essentially respecting that area. So this is a key area indication that we can see that it's a downtrend in the market. So let's leave that line exactly where it is, and we're just going to bump down. Now, when you trade on a 4 hour, in my perspective, 4 hours, you know, is a very, very, very solid time frame to trade on because price tends to follow trend lines and support and resistance areas and key areas to a T. You're not having a lot of variations where candlesticks are going, you know, very far above that area or very far below that area. It tends to respect that area to a T. So let's just look back and let's just fix this line real quick before we move forward. All right. We're going to put this at that top point. So let's do this. All right, so we'll just go ahead and I tend to do two, like tap two and then into the future. So tap here, and then let the line go wherever it goes. See how price respects it. So we got that going. So from wick to wick all the way down, we see a downtrend taking place. So we know that our bias should be sell. Like the most profit you'll make is taking a sell position. And the reason why I say that is because the impulse moves are in the sell direction. Impulse being what direction is the trend? down. So you're gonna have the biggest movement going downwards versus coming back up. As you can see, you look at from just this standpoint to here, that's 230 pips, right? From here down to here, you have 270 pips. So look at this, from here to here, you have about 178. From here to here, we have about 231. So as you can see, the impulse is much more solid than the retracement. So the question is, why do I place one support and resistance line when placing key points versus placing multiple lines? So the reason is, when you're looking at multiple lines, you're basing it off of lower time frames to gauge where price is going to respect. I do that, but more so on the smaller time frame. So like, because this is 4 hour, I would come here and I would do something like this, right? Because I see something happening right there. So I'm like, all right, this is a resistance level. Let's see if price is going to break above it. If price does break above it, let's see if it respects this line. So I would then come here and draw my arrows. You know, my scenario one might be a tap, and then it's going to come down to the weekly key level. Or my scenario two might be a break above it to this area, tap back down here. And if we see that, we can expect an uptrend. So you're waiting for price to hit that area. Price already hit it 2 times and now it's going back up. So that second, whatever happens here is the confirmation of what's to come. So if it breaks above it, you got to wait a little bit longer for the tap here and then the upward motion. If it taps right here and then you see some type of bearish candlestick pattern on like the hour time frame or the 30-minute time frame, then you can rest assured that a downtrend is soon to follow. Right, but remember we're sell bias. We're looking at sell positions versus buy positions simply because the trend is in a downward movement. So now that we have this trend line drawn, you know, we're looking, we see that, you know, it's downtrending nicely. We're approaching this key level, this weekly key level, and the reason why it's only one key level is because this level has respected this price area for like the past, what was it, 2003, 16 years, right? So that's solid when it comes to seeing a support or resistance line. If you know that for the past 15, 16 years, price tends to do the same thing at that area, what are you going to do? You know, your bias is going to be in that favor. You're going to want to trade around that trend. So now that we know, we see where price is at. Price is pretty much at a peak. We got what we call a descending triangle. Price is just reducing, but it's respecting this area right here. And from a descending triangle's definition, we know that once price typically gets to the peak of the descending triangle, you know, it tends to drop. But in this case, it might bounce out of this channel, tap this trend line, and then go up to the daily level. We don't know. That's why we want to just sit on our hands and wait to see what's going to happen. We don't want to take no trades right here. All right? That's another little question. Let me just see if it pertains. Positive. Perfect. Perfect. All right? So we're here on the 4 hour. We see this going on, right? Let's just draw another trend line. Sorry about that. These lights keep cutting off in this computer room I'm in. Last time I'll be in here. So we see this taking place right here, right? So price is now uptrending on the 4 hour. Solid. It's a solid. You know, we still know that the long-term bias is downtrend though. So we must respect this line right here. This line must be respected. Let's draw this another color. Let's see if we can get like let's do like a goldish color. We must respect that line. Why are we respecting that line? Because it's a long-term downtrend that's taking place. Although we have a short-term uptrend, price is still respecting this area. So price may get jumbled up in this area and then come down to the weekly, right? If we see it break out of this area, 9 times out of 10, price is going to somehow retest this line to ensure that it wants to go down. And then from here is a confirmation of, okay, let's take a downtrend or sell position and ride the wave as much as you possibly can. Now, for me, I would take a twin trade where I'm taking two positions. One position, I might close it at 10 to 20 pips. And in the second position, I'm just riding the 50 EMA or the 20 EMA until it gets to a point where I see it kind of like losing its strength in that direction. And that's another topic. We'll go into that later. If you guys have questions, you know, you can reach out to me outside of this. Let's see. All right. Perfect. So we see what's going on here. We see this uptrend taking place. We see that, you know, the line is that price is respecting this line. So now let's kind of look at a lower time frame. Now, one other thing to keep in mind, when you're looking at 4 hour and 1 hour, you necessarily don't have to look at line charts anymore, simply because we're not necessarily looking for key levels. Now, you can mark them up like, you know, we got something going on right here. You know, I see this going on. As you can see, price respected it as support, broke below it, respected it as resistance. You know, that's the most present, you know, key level that we have to reference. So, I mean, we could leave that there, look at the candlestick, see what happens. We see these wicks from the bottom and the top side. So, yeah, let's leave that there, you know, and we'll just put that as, let's see. Type on that bad boy. Not going to type on that. So we'll just leave that there. You know, we just, for future references, we know that, all right, that's like a key level for us. So price may come down here, tap it, come back up, and just start hovering around this area. We don't know until price starts moving. So now what we want to do is we want to look at the 1 hour just to see what price is actually doing. So now that we're looking at the 1 hour, we get a better image of what's happening. So from here to here, we had a downtrend, right? So this was from the 20th of March to April 2nd. It's just been downtrending. The impulse move are the downward movements. These are the steep parts. These corrective moves are the shallow, you know, it's just the retracements. And one little key or little caveat that I like to, you know, I want to give you guys is when you're looking at this, always pull out your Fibonacci tool and mark on the 1 hour or the 4 hour. You don't necessarily have to do it on the daily or the weekly, but you can to get those like major fib levels. But if you mark from here, the top of the wick to the bottom of the wick of the first impulse move, right? And when you're looking at impulse and corrective moves, look at it as the best way I could relate it is an airplane. Like I just got back from Miami, and I mean, you know, I'm still kind of on this airplane vibe. But when an airplane takes off, right, you run into turbulence. Sometimes it's like very shallow turbulence that you don't remember. But let's say, you know, there's a thunderstorm taking place at 20,000 feet up, and then the plane is like dramatically shaking. You know, that's some shit that you're going to remember, and you're gonna reference that to your friends. You might talk to your friends about it. You might tell your spouse about it, your girlfriend, boyfriend, your mom about it. That's something you're going to remember. But those little bumps when you're taking off, you don't necessarily remember that. Think of these impulse moves as turbulence. This right here, that's not an impulse. Why? Because that's a small little pullback. That there's no significance in that. This is significant. Why? Because as you can see, that's about 40 pips, right? 100 pips. So there's pretty much, this came down 100 and then retraced 40 pips. Now, what does all of this mean? What do these numbers mean, right? It's told, this famous guy, this famous mathematician from, you know, before we were, you know, ideas of being alive, figured out that these levels, 0.618, 0.38.2, 50, 78.6, these levels, these numbers had significance in the world. Like for some odd reason, when you measure anything like a tree, you know, 61.8 miraculously comes up in that. Like the length of your arm halfway divided by 4 or some weird number like that creates 61.8. Like this water bottle divided a certain format creates 61.8. And then for these other levels as well are divisible by some of these other numbers. So he figured out that these levels are significant. Now, when he created these levels, they also incorporated it into trading. Now, when price gets to these levels, you tend to see a stop in that area. So price will tend to get bundled up and consolidate right at the level that it wants to stop at and then drop. as you can see here, price didn't break this 38.2, cross above it, and then completely drop. Looking at it in hindsight, you know, it's easier to determine, but just keep in mind that 38.2 and 61.618 are the key levels on the Fibonacci. If it goes beyond 61.8, be mindful that a trend reversal is possible, or is, you know, there's a potential of a trend reversal in the near future. So let's look at this from the top line to the most bottom wick. What do we have? Oh, wow, look what we got here. We got a key level because price, remember, we got this double top at this green level. Price consolidated nicely at the 38.2. Then it wicked up to the 50, but didn't close up there. Never touched the 61.8. Never came up to this 78.6. So we know that, okay, the price might stop at 38.2. So let's be mindful and look for some type of bearish movement to the downside, because remember, this pattern is downtrending from a long-term perspective. Let's look for a sell position. Here we have a bearish variation, right? We had a bearish engulfing, right? We had another bearish engulfing. But this is where you're looking. You're looking for this. Because price consolidated for so many days, you don't really want to trade this yet. You don't want to trade this. You want to wait for some type of radical move to the downside before you take some type of entry. This could have been the indication, and this could have been the confirmation. But this is where you want to enter. You want to enter in that retracement outside that consolidation zone, right? And the reason why is because this game isn't about being early to the party. It's about being right. It's a game about probabilities. If you're taking high probable trades, you know, and your risk management is on point where you're risking very little and you're gaining a lot, it's virtually impossible to go broke. I'm telling you, it's impossible to go broke. You'll literally touch $1 million within several years of trading high probable trades. You know, as long as you're looking at this stuff, you understand how this stuff works, and you're just waiting for price action. Like, you don't have to be early to the party. Like here, let's say you were to take this trade from here to here. Yeah, that's a good 30 pips. But let's say you waited for the confirmation right here, and you rolled this bad boy down here. That's 50 pips, 20 extra pips. You could have stopped here. That's about 20 pips. Let's say you wrote it. You're all green, you know, so why not hold it down here somewhere, you know, or wait for this candle to close. You got you about 25, 26 pips, you know, or you could just continuously follow the 50 moving average down until you see price cross above it and close your position once it crosses above it, you know. So there's many ways to enter and exit trade, but that's for another video. But let's just keep going on. Let's keep looking at more fib levels. Let me just check here and see. We got 3 questions. I love fib, of course. Fibonacci. Man, I wish he was still alive. I would send him a thank you card. Well, so we got this little downtrend taking place. You know, we got these lower highs, lower lows. Prices just continuously just dropping. Oh, it's light falling out on me. So we got these levels, right? So then we have this happen here. Price hit a low. We got a high, right? So let's just kind of draw this out. Or let's type this out. So we got a lower high, which is right here. We got a lower low, which is right here. All right. We got a high, which is right here. The reason why it's a high because it didn't necessarily break past here and complete like a significant higher high. We have wicks, but it pretty much like tapped out at that same point. So it's like a double top, right? But this is where things start to get interesting. We got a higher low. So this is where you want to start watching. All right, you know, the trend is no longer, you know, we've reached a bottom point. The sellers are now exhausted at this point here, and now buyers are stepping in. So at this point, you know, you would have drawn your line from here to here and then into the future, and you would have seen that from this point, let's just say we're just drawing this line from here to here. we would have saw this. After this wick, we would have saw this area. We're not trading in this area because, you know, it's not necessarily confirming anything, but we would have started to see this, another tap here, and then we would have saw this. Now, from here to here is where you want to pull out the fib tool and you want to see what's going on. So as we can see, we got price action. So we got price stopping at the 23.6. Now, that's letting you know that it's a strong trend. You know, price is going up. You could have took a shallow position somewhere up here, you know, gain the 20, 30 pip move, you know, risking 10 pips, 15 pips, or let's say you did risk 20 pips to the downside. You know, this would have closed you out back here. But if you're taking, you know, daily trades, you know, 20, 30 pips would have been a solid move right there. Then on top of that, we got to keep in mind, right? Remember, this gold line, from hindsight, we saw this. Price stopped, came above, price came below it, tapped again. So we could have drawn this line back here into the future, and we would have saw what's taking place here. If we look, let's look here to see if we can find anything. So like, for instance, is this area? This would be like a zone right here, right? So we got us a little zone of where price was tapped as resistance and then tapped as support. All right. So we'll just leave that for the future. All right. Yeah. If anyone has questions, I know I'm moving along quick, you know, and I'm throwing terms around, and you know, you guys may be jumbled up with the terms and whatnot. Please stop me if you guys do like sincerely have questions. Like, please do. No, but okay, so let's look at this. So now we got that little level right there. We see what price is doing. Price came above, came down, tapped it, now it's going up. So what we want to do is we want to see what happens here. We want to see if price is going to respect this as a triple top, because it tapped up here, it tapped here. Let's see if it's going to tap as a triple top and then give us some type of bearish signal, like a bearish engulfing, an evening star, some type of bearish variation pattern with the candlesticks to take a sell position, potentially either back down to this zone or back down to this key level, right? As you can see, Euro USD, about 38 pips, 37 pips. You know, it's not the most, but we know that Euro USD, when you're trading it, it's a bit more solid with the movement. So it just comes with the game, with whatever pairs you're trading. How do you do the zones again? So this zone, I basically calculated this zone. This is more so just a key level zone to me. I kind of used the nearest past price action. So price broke out above this key zone. It came into this area, tapped, broke with this large bearish, this large bullish candle, came up here. And then instead of it coming back down to the zone, it stopped here. Why did it stop there? You know, if we go back, we could potentially go back and see that this area was respected in the past, you know. And as I look here,
sit down. I cleaned up her puke, so trust me, I have her.
How did you feel knowing that you puked on Eva's shoe?
But that's when I went too far. I felt bad about puking, period, in Nini's bathroom and on your shoes. You did give me that shoe, and I was going to get it clean, but it would have cost more money to get the shoe cleaned than the value of the shoe. I bought it in Morocco. Oh, but it's $1 shoe. Yeah. So I got you a gift card to Zara.
Hey, yo.
The retail value of the shoe.
$70. Gift card. I got it right here, baby. Let me give it to you.
Sorry about that, you guys. So as we can see, looking at the past right here, right? We saw a price. What did it do? It came down. It tapped this area. Came up, consolidated a bit, came below it, tapped it. So right there, boom and boom, we got support, we got resistance. We could draw that into the future and just keep that there as just a future area to just be aware of. Price hasn't touched it for a while, but it's just being aware. Oh, we got it touching again, right? Right up here, we got these wicks, respecting it. So then price broke above that first zone that we just drew, tapped, came above, came below, tapped with the wick, and now it's going back up. And as you can see, price is legit tapping this line from both ends. It's just tapping it and going in the opposite direction. So that's something that, you know, I would leave and I would just draw it out into the future. I would literally just draw it out into the future, you know, and as price nears that area, I'm looking to see what's going to happen. As you can see right here, what did we have? We had a bullish engulfing pattern. We could have even looked at a 30-minute chart to see if we could find an even better entry point, you know. Still, we got that bullish engulfing, another confirmation. You know, so that's what we want to do. Like when you're looking at the higher time frames, you want to draw out the key levels and kind of bring it in to a smaller time frame, continuously drawing out the key levels and just look at the overall trend, right? And then once you have that information in your archive, you see what's taking place, then you can start drawing out your scenarios, you know, like what's going to be your scenario one. For me, you know, my prediction will be scenario one will be right here. Why would this be a scenario one? Because it's within this zone. You know, I can't start looking at up here until price breaks out above it. Then I can start looking at, you know, what could happen up here. But right now, because price is within this area, this is my scenario one. What would be my scenario two? This would be my scenario two. Why would this be a scenario two to me? Because once price gets up to that top line, it could potentially break out above it, retest that top line, and then we could see some type of bullish movement outside of this trend to the upside. We already know that price has hit a weekly support zone, you know, from a downtrend perspective. So the downtrend could be exhausted at this point. We could be seeing, you know, the beginnings of an uptrend. We don't know. But if we see that it breaks past this line, or we see it break past this green line, retouches it, breaks out of this yellow line, touches that, and then goes up, we can rest assured you that, you know, a bullish environment is soon to follow to the upside, right? So before I move along, do any of you guys have questions? Let's see, we got one in the chat. Oh, that's during you. All right, solid. So we'll leave this marked up right here, and I'm gonna leave my scenario one and scenario two because, you know, tomorrow when I come back to the charts, I want to see what took place. You know, whether this happened, boom, boom, or whether this happened, boom, boom. But what I'm going to do is I'm gonna come here to this line and tap it, and let's just set an alert. You know, let's set an alert and let's just look at it. Let's just say, you know, crossing the trend line only once. You know, let's just set that out. Expires on the 31st of May, right? So we got that. So I'm gonna be notified within the app. So when I tune in tomorrow, I'm gonna get some type of notification if it crossed or not. You know, if it reached that line. But that's what we want. We wanted to tap that line and do something off of that line. You know, or kind of hover near it and then come down so that we can take some type of entry to the bearish side. All right, so let's just create that. So boom, that alert is now created. That alert has not been created because I have a demo account or a free account. It's all good. But based on the app that we were recommended in the chat, what's that app called again? What is that? Call Levels. Just download the app Call Levels. That will definitely be your saving grace when it comes to alerts. If you're using a free TradingView account, you know, it'll basically send you those notifications directly to your phone. Shout out to the person that recommended Call Levels. I think it was Carmen, if I'm not mistaken, or forgot who recommended it, but please download that app. Call Levels. Want to create the alert. So basically with creating that alert, all I did was just double tap the line. If you double tap the line, this box pulls up so you can kind of change the settings of it, the colors, you know, where its coordinates are. But you click here on alerts, And then you basically, the condition being Euro USD, what do you want it to do? Crossing either direction, crossing up, crossing down, greater than, less than, moving up. You could base it off of percentages, but just a crossing is perfectly fine. And then your options, you have only once. So if it like taps it or crosses over it once, it'll notify you once per bar close. Like, so basically if it goes above it and then closes above it, it'll notify you once per minute. Then you want to set your expiration time. And then if you have a paid TradingView account, you can set it to open ending so that it never ends. And that once it happens, it will alert you. And it'll pretty much just play a sound. So you just choose which the alert you want it to be. And then it's pretty much set in stone, and you could just set it, forget it. When you log back into your TradingView, if it does cross, you'll get that alert immediately. You know, say Euro USD crossed over trend line at, 1.13192, so that you could just kind of gauge and go directly back to it. All right. Oh, wow. Thanks for that heads up, Finley. The subscription on call levels. Honestly, I mean, paying for the subscription on TradingView is not expensive. Like, it's definitely worth the investment because, the most of our time is going to be spent on TradingView, marking up charts, using the tools, using this as an asset. And then on top of that, if you have TradingView on your phone, these markings transfer over to your device. So we're pretty much, trading from our phone. So you can go to TradingView to see what's going on directly from the phone and then place the trade and better trade it forward. So it's an investment that's well worth it. And, if you have, an LLC created or whatnot, you can pretty much write off all this stuff that you're paying for, as educational purposes or some type of tool that you're using to make money in this market. And it helps with your taxes as well. So let's keep moving along. All right. So I want to look at another chart. So we kind of marked up Euro USD. We kind of got our scenarios. We're at this area. So we'll just wait it out, throughout the week. We don't got to worry about watching this one chart. We're going to mark up multiple charts and we're just going to wait it out and see what goes on. So let's just kind of look at something else. Let's see what we got. That one's super marked up. Let's see here. I've already marked that one up. Let's mark up Euro USD. USD CAD. All right. So first things first, we gotta look at the overall bias of the market. So let's see what's happening. So we had a downtrend, a little uptrend, a downtrend again, an uptrend. Now we got this kind of sideways movement, but it looks like we're in an uptrend taking place here, right? So, all right, this is solid. Let's see what we can do, what we can find here as far as key levels goes. So take our horizontal tool. Let's just mark up some areas. So I got something here. Boom. Why do we have that? Because price tapped, price overlapped, price overlapped, price tapped, price tapped. We had some breakouts taking place here. It also tapped right there. So this will be a weekly key level. All right. I'm going to change the color. I typically choose this electric green color. All right, so we got the downside, boom. All right, and then before we move along, let's make sure to see if the candles are respecting this area, how the candles are respecting the area. So what do we got here? We got, boom, price kind of wants to break out, it hovers, breaks out, taps, acts as support, acts as resistance, breaks above it, acts as support. All right, it's acting as support. You got resistance here, consolidation at that level. All right, so we're seeing some quality movement right at this level. Consolidation. All right, we see, a little gap going on there. Support. So that's key. That's a key level. We'll leave that. It's not support. It's support, but it's a key level. All right. So we got that. Now let's go back to the line chart. Let's just look at from a higher perspective, or from a resistance standpoint. Come back here, and we can see we got this area right here. So do we see anything significant about this zone? Not necessarily. And the thing is, if you don't see anything, don't force it. You know, don't force it. So it's not a significant area, but because price came here twice and it pretty much topped out, I'm going to mark it. And I'm just going to look at the candles to see what's up with the candles. So we have a little bit of consolidation in this area, a little overlap taking place. Let's see what's going on. Broke above it, resistance, and then resistance. So solid. So we got 2 resistance points. So we'll leave that there as resistance on a weekly base, right? But it's not key. So if you ever run into something like this and you want to distinguish which one is key and which one is not, put an asterisk next to the one that's key, because that always means that it's important or whatnot. So boom, we got that. So now let's drop down a bit. So instead of looking at the daily, let's look at the, instead of looking at the weekly, let's look at the daily. Come back to the line charts and let's just see what's going on. All right. So just off of my eye, I see something right here. Boom. So I see something right there. All right. Let's see what we got here in the chat. Yeah. So the reason why the top line is not a key level and the reason why the bottom line is a key level is because the bottom line acted as support and resistance. So that area, that price area, has tremendous significance when price gets back to that area. The reason why this top line is not key is because it's only acting as resistance right now. So we saw what price was doing. Well, from a significant standpoint, we saw that price, you know, acted as resistance, and we seen resistance here, but we're not necessarily seeing price tap it and then shoot up 1,000 pips. You know what I mean? Like what we're seeing here is, as you can see, like from here, it tapped, dropped 1,000 pips, right? It tapped, dropped 500 pips. This area is very significant. Very significant. So we want to be very mindful of that area. So now that we have those 2 areas marked up from a weekly perspective, we want to look at the daily to see if we can find anything from a daily perspective that acts as a key level. And right here, I see something. What do I see? Price gapped. Price acts as resistance. We got a little bit of support, resistance in this area. We got an overlap taking place. So we see that there's a lot of confirmations letting us know that, okay, that's a key level. Why? Because price was both support and resistance at that area. Or that area was both support and resistance. So that's a daily key level. And then we'll just look on the upside. Before we look at the candlesticks, let's just look at the upside. See if we find anything. 9 times out of 10, we won't. But let's see if we see anything. So I see this. Boom. Why do I see that? Support, resistance, consolidation. I'm seeing a little bit of resistance in this area. So let's go ahead and mark that on the daily. And we'll just hold that. So we'll hold those areas, right? Like I mentioned, if you don't see a key level, don't mark it. Don't just start marking, you know, lines after lines, just at any level, just to mark it. You want to make sure that these levels are significant. Because once price gets to those areas, they tend to respect that area very well. So I was looking at the day, I was looking at the weekly, excuse me, but let's see if they respected that area still. From the candlestick perspective, price respected it, it's consolidating, respecting it. We got a little gap. All right. We got some support right there. Let's see on this side. All right, so we got some resistance. All right, so it's still key. Still key to us. All right, so we know that we got our weeklies, we got our dailies, All right, and we know that price is doing what right now? Price is uptrending. How do we know this? Because of this. We got us a higher low, another one, another one, another one, area, and we'll leave that area as consolidation. And then we also have higher highs. All right. So price has, been uptrending for quite some time. Since September of 2017, price has just been uptrending, right? So now that we know that, let's go ahead and grab our trend tool on the daily. Just mark this out. So hit the second to the future. It's not really respecting anything there. Let's cross it through. Tap some lines. Let's tap right about there. All right. So we got price kind of overlapping, gapping, touching, gapping, but price is pretty much respecting that area right there. So we know that from a daily perspective. Now what we want to do is we want to go a little bit further in depth, right? We want to look at in hourly time frames, or hourly. So let's look at the 4 hour first, right? So as we can see, price is uptrending nicely. It's uptrending, it's uptrending, it's uptrending. And now we had reached this area of consolidation. Well, actually, this could be a symmetrical triangle. Why? Because price is decreasing as well as, it's declining from a top perspective, as well as from it's increasing from a support perspective. So we got that taking place right there in that area. So we know that that's like some type of asymmetrical triangle taking place at the daily level, which is significant because this is the key level that we know about. So at this level, what have we seen? Price tap here and come down. We've seen price tap here, comes down. Price gap, it comes down. Price is overlapping. It's trying to get above it. It's really not doing it. Now it's starting to get tighter. We're going to see something happen in this area, whether it's going to be a bullish movement or bearish movement that taps this trend line. We might see some upward motion. But I can see, because we're uptrending, my bias is to take buys. Can you explain that again? Which part would you like me to explain again? The asymmetrical triangle?
Can you explain where you did the line crossing again? Like,
Which
okay,
part?
no.
Right here?
Yeah.
Got you. So all it was is just me, it's just my eyes seeing something. So as I'm looking at this, I'm seeing, you have this double top right here, right? These are another two double tops, but you also have, if you draw this, you just have this kind of like downtrend that's like taking place. Where if you just draw from there to there, you have this downtrend, and you can kind of gauge it because price taps it, and then price doesn't want to break out above it to like reach this area. So it's like respecting that area, like that top line, this line right here. And then from the bottom perspective, we also have from here to about there, we see that price is like gapping, it's overlapping, it's touching, but it's staying within that area. So it's pretty much a symmetrical triangle that's taking place, like from the top and the bottom. It's just creating this kind of like wedge pattern in this area here. And then
Dang.
Everything good? Everybody alive? All right, take that as a yes. So you see, we got like patterns like this, like a little double bottom taking place here, but you're going to see that price is going to start getting bundled up, and then it's going to break out either to the upside or the downside. If it breaks out to the upside, what we're looking for, and mind you, we're on a 4 hour, so this is like a lot of data that we're looking at. We want to see price break out past both this symmetrical triangle trend line as well as this daily key level breakout, potentially come out here. Why here? Because we got this double top. Come back down, tap on the daily level, And then right here, we want to look at the lower time frames, like an hour, 30-minute, for some type of bullish pattern to the upside. We want to see like some like serious impulse like this to the upside to take a position. And then you can take a position there, risking, you know, few pips, maybe even this trend line as your risk. So you got 25 of a risk. Let's try to gain about 50 pips. So you got a 2-to-1 risk to reward ratio, you know, which is solid. So we might have that take place. Boom. Price might come here. Or we might see price get bundled up, tap here, and then break out to the bottom side. Then we might see a little retrace to tap this line and make sure that it's going to go down. For some odd reason, price just does that. It retests certain areas. And then we might get it to come down to this bottom end. And in here, when you're taking a trade here, you know, just kind of risk about, you know, 25 pips of upward movement. Even you could risk a little bit more if you're leveraging correctly, you know, 50 pips of this like double top right here, you know, and just let it run. You know, gain 50, gain 100 pips if it potentially can go that far down. But you just want to kind of look for that movement. So we'll leave that marked up on the charts just for, you know, future references. And then as we look at, you know, the lower time frames, it kind of just tells us that same story, just what's taking place. You know, we have a morning star right here. Boom, uptrend. What's happening over here? You know, there's not much taking place over here. So we're not really even playing in this area. Like right now, we're sitting on our hands. Like we shouldn't be taking no trades like right now until we see some type of confirmation, whether it's a lower high, you know, or we're seeing a break of this trend line, or we're seeing a break of this upward trend line. Like we just want to sit and just let price do what it needs to do. In the meantime, you know, we use our harmonic scanners, you know, take trades that, you know, are being alerted in the chat room, VIX trades, you know, my trades, Chris trades, you know, 10 P&D, 10 SNR. We're doing all of that while we're watching this, because this strategy is very, very powerful, especially if you're using these moving averages. These moving averages, you know, if you ride it, you could literally, like, if it's trending, whether it's going in a downward motion or upward motion, you could pretty much like ride a trend for a week straight of just downward movement. As long as it does not break above that trend line, you can literally just hold that trend as long as it goes until it breaks above it and then close your position. Like someone who would have took a trade, you know, somewhere up here at this weekly resistance level. And why would someone take a trade here? Can anyone answer that real quick? Why would someone want to take a sell trade at this weekly resistance level?
Because price is struggling to break that over there.
Exactly. It has consolidated right here in this zone. Right here in this zone. Right. And the last market structure that we can gauge, this was the last lower high. So we're looking for some type of retest to this area. Did price do it? We didn't really get it. No, we didn't get it. But because we have this going on, we know that the direction that we're going is down now. We're no longer going up. So you could have took, you know, a trade somewhere down here, you know, risking back up to this level, you know, risking back into the consolidation area, or you could have just held it. Like you would have seen this happening, this consolidation. We're already 55 pips in, right? Let's say you're swing trading it. For those of you that are asking, do you hold trades over the weekends? This is a prime example of holding a trade over the weekend. You literally take the trade and you just hold it until it breaks this trend line, this red line. This is a 50-day moving average, right? So we're still trading it. We're 8 days in, and right here is where the trend line was broken. So you're 340 pips down in 7 days, right? In 7 days. That could have been a twin trade. Like one trade is just riding the wave. The other trade is closed at 20 pips. Yes. So my my MA is set up for the but we're not going to discuss that because this is being recorded. What's that? Did I have a question? All right, I'll take it that as a no. So before we move along, do any of you guys have questions about these specific areas? Any questions whatsoever? All right, so I'll take that as a no. So we'll just keep moving forward. So like I said, we marked up the chart so we know what's to come. And because we're in an uptrend bias, my scenario one would be this. Why? Because from a long-term perspective, a daily perspective, we're uptrending. My scenario two would be this. And I just marked this on the charts just to help me reference, what I was looking at on Sunday. If I look at this on Thursday and prices in this area where I know it's supposed to do something, I want to make sure that what I was thinking on Sunday is exactly what I'm about to do on Thursday. So just leave that on the charts. You don't got to touch it until the price action has took place. After the movement is done, then you can kind of delete all this previous information, and then you got stuff going on in the future that you want to focus on. So we'll leave that there, and pretty much we got this, like I said, this asymmetrical triangle taking place. Whether we have a big break to the downside or a big break to the upside, we'll just wait in the future week, this upcoming week, to see what takes place. We're looking at the 1 hour, so this should happen within the next day or two to see some type of big movement. Now, you don't need to catch this initial move. By no means should you be trying to trade this initial move. You want to trade the pullback. The pullback is the confirmation to let you know, yes, we are going up now. And what a pullback is doing is, once it moves in your favor, take the fib, calculate that pullback, and price should tap that zero, come down to one of these levels, either the 38.2 or the 61.8, and then that's a confirmation to let you know that there's a trend continuation to follow. So pretty much it will bounce, consolidate, and then keep going up. That's when you take your entry at that consolidation point. All right? Not on this impulse. All right, does that make sense, you guys? Just at least one answer, just to make sure that, I know it's me. All right, cool. Solid, perfect. All right, so we got USD CAD marked up. We kind of got our analysis on CAD, like what we expect to come in the weeks to come, right? Now, you can also incorporate quarters theory in the mix where, you're looking at these levels and you're just marking lines at these like key levels to see what's going to take place at these levels. And once you incorporate like these lines at these levels, that's when you start to see like, yo, price is like really doing what it's saying that it's supposed to do. Like for instance, like a 500 around this area here. Marking at these levels, like you'll see, like if I was just marking, quarterly theory levels, we would have saw this double top. We could have easily this, back in at the end of March. We could have easily took that. Now, sure, there's a lot of you guys that took this trade because you saw the double top right here, but guess what? Price respected this quarter area with the wick, and then we had this bearish variation pattern, which is basically one bullish candle followed by 2 to 3 red candles to let us know that the momentum's to the downside. And you could have ate whether that's 120, 200 pips on the downside. So using like just the top down analysis with quarterly theories, making sure that your lines are easily you could distinguish each line. So if you're using your quarterly theories and you're using like a blue line, make sure that it's consistent, that all your quarter lines are blues. We don't want to do that. All your lines are blues or all your lines are reds, yellows. Just keep it consistent so that it's easy for you to read on the charts. All right. So let's look at one more example. Just to instill this in your brains. Wow, look at AJ. It's coming down. All right. I think I may have marked up all these charts. Bingo. We got one more. So let's go ahead and look at this one real quick. GBP CAD, right? So coming in the week, what do we see? You know, price is moving up, it's moving down, it's sideways action. We're seeing some uptrend going on here, a bit of consolidation in this area, right? So what we want to do now is let's just pull out the line chart, right? Let's see if we can find any areas of key already. I see this. Why? Price boom, boom, boom. Support. We got all this resistance in this area. A little bit of overlapping, a little bit of tapping. We got a lot of resistance in that area. But in relation to where price is, do we want to use that level? It's not as significant right now because of where it's located and where price is, but we'll just keep it because we know it's significant. And then here, we got another area because price tapped. It tapped. We got a little overlap here. So we got, you know, we'll use these two areas as key levels to keep in mind. So we got a weekly and then another weekly. So now what we want to do, I'm going to come here, look at the candles. All right. Just make sure that these candlesticks are respecting these lines. We got some bullish engulfing, another bullish engulfing. We got some variations, consolidation, respecting, a lot of wicks, respecting that support and resistance. You know, a lot of consolidation right at that area. This lets us know a lot. And remember, we're looking at the weekly time frame. So this is damn near I mean, years worth of data of consolidation, like just right here, from here to here. You know, we're looking at, let's see how many weeks this is. It's 1,288 days of consolidation at that one area. So that's significant. That lets you know it's significant. And then even up here, like a few candles here and there, we got like this taking place. You know, that's 371 days a year, basically, of consolidation. It's just tapping. So these two areas are key levels we want to mark. And then we just come down to the daily, come to our line chart. And then we just look. We see what we see on the daily. We can find anything. So if you think that this is a key level right here, tap 1. If you don't, tap 2. If you think right here is like a key level, excellent. Solid. We're all getting it. Perfect. So we'll tap it right there. And why are we tapping it right there? Because, once again, we got the line tapping, little gaps. We got to tap from a support standpoint and a resistance standpoint. We got taps, gaps. A little bit of consolidation in that area. All right. We got some more taps, overlaps. You know, so that's solid. That's a solid area that we're going to keep on the charts. Now let's see if we can see anything from the upside, on the top side. Let's see what we can do here. Does that respect? Somewhat, but that right there, this was what I would consider being forced. Like I'm forcing a key level, and I don't feel confident with this, so I'm not even gonna mark that and leave that as like a key level. But what I would do, I would just mark it because I see this double top, right? And I'll put an asterisk on this daily to let me know that this is a key level. Anything that you could do to you know, distinguish the key level from just a resistance or a support level. So even if you want to put, you know, in parentheses, key level, you know, if it helps you remember that that's the key level and that this is just a daily resistance, you know, do whatever that helps you. Like, allow it to work in your favor. by any means necessary. And then let's just look at the candlesticks. So yeah, so I did see that as well, that there was support and resistance, but I just kind of felt a little like when I was looking at it, I felt from a line perspective that it was a little forced. Like I was seeing this, I was seeing this. Now that I zoom in, I see these gaps here. You know, I see that right there. You know, it is touching here. You know, we're seeing a lot of this. So I marked it because I saw all of this consolidation, but I didn't want to just quickly say, oh, it's a key level. You know, because I like to be like 100, like I like to be as much of a percentage sure that, you know, it's a key level. But now that you zoom in even further, you know, you can see that that line that we drew is still a solid line to be there, key level or resistance, because we're seeing a lot of action taking place at that line. A lot of consolidation, a lot of gaps, a lot of overlaps, taps. It's all taking place at that area. So we'll go ahead and leave it. And you know what? Because Vic mentioned that, we'll go ahead and change that. We'll leave it. We got us a resistance and a support key level. Perfect. My dog. Exactly. Exactly. So it's basically, you know, you're looking at these levels and you're basically gauging, okay, price has tapped that area. Sometimes price has, you know, came down, it overlapped it a bit, but overall price wasn't doing no dramatic movements outside of that and then uptrending. And if it did, it broke out, it retapped, and then it started its uptrend. As you can see, it broke below the daily, came up, retapped, and then followed the trend. And the reason why it retapped this line is because price was above the daily. So the daily was acting as support, the most nearest support or the most recent support. So after it broke it, price tapped it, and now it's coming down, right? So the same thing here. We got this level, and then price was acting as resistance at this weekly. But guess what we have? We have a ton of consolidation. Wicks are just hovering within this area. It's trying to break out, coming back in here. But then we had this bearish movement outside of this little consolidation zone. It's still consolidating. This right here will be considered like a range expansion, where it's consolidating in this like small area, and then it opens up. It makes this bigger consolidation. You can look at it from range expansion or range contraction because it's getting smaller. It's not ranging from this level to this level. So now it's a little bit tighter. But we want to see, you know, some type of clear indication that, all right, this is moving out of this channel in the downward direction or the upward direction, right? But now that we have, you know, our key levels marked up from a resistance and a support standpoint, let's look at the 4 hour. All right, so 4 hour. Like I mentioned before, we got consolidation right in this area. So this is a no-go for me. Like, I do not like to play around and stuff like this because it's hard to gauge. We know that from a daily perspective, that price is uptrending. We see that it's higher lows, higher lows, higher lows, higher lows. Price is uptrending. Got the higher highs also taking place. Then we reach this top over here, where price tapped here and now it's tapping here. So it's pretty much like a double top. So we just want to be mindful of that and gauge, okay, what direction does price really want to go next? Is it going to do some type of bearish movement down to this daily? And will we be able to catch, you know, somewhat of this 600 pips on the downside? Or is it going to rush back up to this weekly, come up to this daily, 400 pips? We don't know. So we want to see some type of impulse like this. We want to see these type of movements, right? But from like a 4 hour or even a 1 hour perspective time frame. So right here, I see some type of, you know, chart pattern. I see some type of triple bottom taking place. So let's draw some type of, let's draw us a trend line. You know? So we got that. So we can, that's the lowest point. So right here was the highest point. Price broke structure. Why? Because this was the highest low. to date. Price came up here. It made a high. It didn't make a higher high because we had a high. We had a high. We got the high again, the high. The high is just tapping on this line. Price broke that structure, retraced, tapped this line once again, came to this weekly level because we drew this weekly level out, tapped this line again. Now it's starting to lose steam, right? And guess what? I'm seeing something right here. I'm seeing this. So this would be a perfect indication of a trend line as it's like forming. I'm seeing this right now. So we pretty much are, anticipating some type of downward movement, right? We want to see price respect this line, okay? Respect that line and come down here, break below it, retest it, look for some type of entry right there, and then follow the trend to the downside. That's what we're looking for. That's my scenario one from this indication, right? Once we start to get down here, let's see. Let me just draw a trend line to see where we at relative to this uptrend. Once we start to get into like this area, this is where we need to be, kind of worried or kind of just paying close attention. So that's like 94 pips from that side to this side. But we want to pay close attention because price could respect this uptrend and then go back up. But if we see price just come down here, we want to close our trades right here because we don't want to lose any gains that we made from this taking place initially, our first analysis. We want to close our trades after we get, 30, 40, 50 pips because we understand that this trend line is being respected on the upside. Now, if price breaks below this trend line, what will we see? We'll see some type of price action that looks like this. Come down, tap that line, and then continue on a downwards trend. We could see that. And, my bias is that that's going to come. That's going to happen. Why? Because we have this double top right here. So it's letting us know that, price doesn't want to really break out of this level. And it's pretty much like ranging. Right now, it's like in between these two levels. So we're looking for this downward movement because we got this trend line from the near future to follow. So we're just going to kind of, gauge it. Now, as price does what it needs to do, we want to look at the lower time frames for entries, right? So we see where price taps, we got this downward movement. This retracement right here looks like, I'd say about in between the 38 and the 50. So we draw that to here, right in between the 30 and the 50. It never closed above the 38 though. It respected the 38, but whipped up to the 50 and kept coming down. So this is a trend continuation, right? So we could have took an entry here. Why would we take an entry here? Because price no longer made a higher high, it made a lower high, and now we're kind of like in a sell bias from an hourly perspective. So we could have took a trade right there. Now we got another impulse move from here to here to this point right here. We got a 61.8. This is letting us know that the trend is starting to get weak and that we need to kind of start thinking about closing our trades. Whatever trades we're taking, we could take one more because 61.8 is significant to the downside, right? So we could take that. And then from this point to this point, about 121 pips in like 13 hours. This is a VIC trade right here. This is VIC gains. Those are VIC gains, right? So we got that. Now we come down here to this area, we see this after we saw this consolidation. We come here, we tap there, boom. We see at 61.8. You could have took a trade there as well. We got a variation, but you're looking for chart patterns. Remember, we're looking for candlestick patterns to see what's taking place. If we come down to a 30-minute, because the hour wasn't really giving us a candlestick pattern, I don't see anything. So although it stopped at that, at the 61.8, there's no real indication of, a downward movement. It could have been like one large sell-off wick, and then it could have just spiked up to the top. So you want to be mindful and kind of use everything in conjunction with each other, like the trend lines, the overall analysis of the market, Fibonacci retracement to see what's going on. You know, use all of that to your favor, right? So then once you get to a point like here, you see this. See like 100% retracement, meaning that the trend is due for some type of reversal. What might that reversal be? What we just draw it up. Because it was uptrending. Now it's just kind of 100%. We might see some type of downward movement. So at this point, what do we have here? Look at this. Check this out, you guys.
Simple.
What's that?
Pretty straightforward, right? Cool. Moving forward, so now you know what a candlestick is. Mixed language, okay, cool.
Gotcha. Wait, so repeat that question for me. Was that a question directed towards me? I guess not. All right, so we'll just kind of gauge this real quick and just look at it from a fib standpoint. So we have the 50. It stopped at the 50. It's respecting the 50, which is still within this little zone. So we can take an entry around this area because on the 30-minute, guess what it's telling us? That it's a bearish engulfing, right? So the next candle is going to be our confirmation. If it's a bearish candle to the downside, we can take that trade. And our risk, what I would risk, is this high point being, you know, that wick right there. Or if you're leveraged correctly, you can risk this top portion right here, this double top, which is 28 pips. And if you're looking at a 2-to-1 risk to reward ratio, try to gain about 50 pips on the downside. If it goes down to 100% and you start to see these wicks and prices like not trying to like break through this 100% or this 0%, then you want to close your trade, you know, at like 40, 35% or 35 pips. But it's really up to you. But right now where price is, you know, it's at a solid area where, you know, a trade could take place, but I wouldn't trade on this candle. I would wait for the next candle to give us some type of confirmation. And really, I would want to see what's happening on the hour time frame. Because right now it's looking like, you know, we might have some type of, we got this bullish candle. It's like doji because, you know, the wicks are pretty much the same size on both sides plus the body. We might, if we have a bullish red candle to follow, that's an evening star. We can rest assured that price action is going down, right? And if this candle closes down here towards the bottom of this wick, that's letting us know that the sellers are, you know, in control. We already see this wick here letting us know that sellers are in control all the way down. Sellers are in control. Buyers are in control. Why? Because there's wicks to the downside. Wicks to the upside. Sellers are in control. So we're looking for some type of sell position at this point. But we first want to gauge price action and see how price is reacting at that level before we take any type of entry. Okay? Whew. So I know that was a lot of information, you guys. I threw a lot on you guys within this hour and a half. You know, I really appreciate everyone that, you know, jumped on. I'm gonna open it up for questions. You know, let's see if see what we got going on. So glad I got on this call, bruh. I'm glad you on the call. I'm glad you're on the call, man. I appreciate that, man. I really do. So does anyone have any questions? Like whatsoever, you know, anything that I went over from the past, you know, do you guys have any questions? Like literally anything. There's no dumb questions. Please ask me anything. Please.
I got a question. How do you know where to start drawing the fib lines from?
Great question. Solid question. So remember the reference that I used of the turbulence in the airplane? Look at this. What's that?
I got on the call late, so.
Oh, got you. So I made a reference of, you know, an airplane because I just got back from traveling. And, you know, one thing that you always remember on a flight is heavy turbulence. When the plane acts up in the sky and you grip the chair like, yo, what's going on? You know what I'm saying? That's something that you remember. You know, when the plane lands, you might talk about that with the passenger next to you. You might talk about that with your girl. You might, you know, bring that up. Like, yo, I'm not riding Spirit no more. The turbulence was crazy when we were like halfway through the sky. Like, you remember that. You don't remember those small little bumps. Like this right here is a small little bump. You know, to me, that's not necessarily significant. Some people would take that though. They would say, all right, let me draw it. You know, it does stop at the 38, you know, and I'll take this trade right here. but you want to look for, you know, significant drops, like something that's very deep, you know, and you see the retracement right here. When you draw from wick to wick, you see this this corrective move. This is a solid corrective move. And what does this mean right here? You would have basically, after you saw this, you would have drawn this. You would have drawn this here, because let's say, let's go back a little bit. Let's act like none of this was here, right? And all we saw was this. So price came up. It respected that line. Why? Because we drew the line from here to here, because that was, we started to see that downtrend. Initially, your first line would have probably been this. It would have been from here to here. Why? Because price respected that line there. That's all you see up to that point. If there was nothing happening here, this is all you see. And then as price starts to move, you start to see, okay, price broke that line, right? Broke that line, retested that line, and now it's uptrending. So we're no longer, this line is no longer valid. So we cut that line out. Now we can keep drawing lines, but we're looking at so now we draw a line. We don't want to draw a line here because we have these tops, right, that are just being missed. Like we're pretty much drawn to the endpoint, but we can. You can draw that line here, see what's happening. Price tapped, broke above it. We saw this happen, came up, tapped. You could have drawn a line here, right? Price hovered, it stayed there. You know you got this line here. So what we're doing, we're waiting for a break of this line. You could have took an entry right there. What happened? Look what happened. Price broke past this trend line, retested, and then uptrended. This pretty much happens when price is confirming, like, all right, we're going up. This happens. It happens in different variations. It might not come all the way back down to the line. It might come down halfway and then keep going up. But most of the times, price will break out, retouch that line that you had as a trend line, whether it was an uptrend or a downtrend, and then it'll start going up. So we had that tap. This tap would have been significant to let you know, okay, boom, it tapped. Let me take a buy right here, and then I'm going to risk this area down here. So this right here was about 44 pips. This little area, 44 pips. So for me, I would have been like, all right, 44 pips. I want to gain, you know, anywhere from 44 to at least 80 pips of upside. We know that GBP, Canadian dollar, moves, you know, in large amounts. So we can bank on 80 pips, right? Boom. If you set 80 pips, it would have stopped there. Now, it's the risk you take. You could have put a TP at 80 pips and just left it alone and let it do its thing, and it would have just, you would have gained your profits. Now, if it would have came down and then closed you out at 44 pips, so be it. The thing is to just allow your risk reward to work in your favor, set your stop losses so you're not taking too big of losses, and just play the game the way the game needs to be played, right? But from here, what I would have done, because this is the lowest point, let's say we were here, right? It's the highest candle that we have so far. You're not drawing fibs yet because you don't know if this is the highest point. You start to see this. Price is starting to dip down a bit. Now let's draw a fib because we're starting to see price drop, right? So boom, we're gonna draw up from this wick to that wick, right? Let's see what happens. And you can set it up where it goes into the future, like the lines extend. So all you got to do is just double tap your Fibonacci and then highlight extend lines, and it'll pretty much extend the lines all the way out into the future. So we see that price got stuck at 38.2, 0.382. What does that mean? Price is going to continue in an upward motion. This will be considered the lowest point right here. You can use that or this, but this is the lowest point. This, we're not using this. Why? Because this isn't big enough turbulence. This is turbulence, right? So now price is going up. We know this is the lowest point. We're not drawing yet because price hasn't really showed us some type of significant area. Like we saw this one candle going down, these two candles, but then follow that, we saw this larger candle. So we're not drawing yet. We're looking for some type of significant pullback. Boom. We got some type of significant pullback right here. Now let's draw it. Here, it's up here. What do we have? Price is Comes down, it's consolidating at this 0.618, right? Let's go across. Does it break 618? Oh, we got a 618 break. It comes down 100% retracement. The trend is no longer valid, right? And we can tell it's no longer valid because guess what? We had these higher highs. Look at this, a lower high. It's no longer valid. So now we're looking for sell positions, right? So once we have this lower high set, that's when that kind of confirms, unless it's not okay. Let's be short bias. Let's look for some some short positions to take. You could have put your fibs right here. From this, we saw that price retraced down here, 100% retracement. You don't want to take that trade. Why? Because it's 100% retracement. You don't know if price is going to keep going up or if price is going to go down. But then we had this happen. Price came down. Let's do it one more time. The top part, the bottom 0. But let's just see what price is doing right here. So price, look at that. Stops at the 50, wicks up to 61.8, and that's where we're at right now. So what are we doing? This is where we're at, literally right now. So what we're doing is we're waiting to see if price is going to go down. Like we're waiting for candles to confirm this, like some type of action like this, impulse. We want to see large bearish candles to the downside. These small candles, like it's smaller than the previous bullish candle, so it's not really telling us that it's significant. You know, once this closes below it, that's a confirmation like, oh, okay, I need to pay attention. This is very bearish. The sellers are in demand. This wick is letting us know that sellers are in demand, but we're gonna have another candle. This candle might go up higher. We don't know. It might come up to 61.8. It might go up to the 786. We don't know. So we want to just wait it out. If the next candle is also red, you know, we could take a sell position, risking, like I was mentioning, some 10, 15, 20 pips of upside motion, you know, just because we're kind of midway through the range, and just allow the trade to work in our favor. If it goes down, back down to this line, sell your position down here, you know. This would have been a solid from there to about here, 34 pips. You know, risk 15 of upward motion, 15 to 20, gain your 30. If it breaks below the 0, it's going to probably retrace down to this negative 27. You know, it's about 58. You got to understand these fib levels. Once you start to understand how they work and how to, like, what each level means, like, you want to pay attention to the 50 when you're looking at consolidation, right? When price is moving sideways and then it breaks out of that consolidation, draw the fib from the lowest point to the top of that breakout. If price retraces back to the 50, that 50 is pretty much the top of that consolidation, the bottom of it or the top of that consolidation, and you'll see some type of upward motion if it stops at the 50. If it goes into 61.8, all it's doing is just opening up the range of consolidation, and it's going to keep consolidating. Same for the bottom side. If it's consolidating and it goes down and then it comes back up, it's typically going to stop at the 50, right? The 38.2 and the 61.8, this is for uptrends and downtrends. You draw it from the top of a trend or from the impulse move to the bottom of the impulse move while you're seeing a corrective move to gauge where price is going to go to next. You don't have to see all of this. You can literally gauge it based off of here because we're seeing prices now going up. It's no longer just shooting back down. So we could have put it from here to here. If we saw that price got lower, then we'll just move it up. Just keep moving it up. As long as prices, you know, it's respecting that fib level, just keep moving it up until it gets to a point where now it's at a point where, all right, cool, I can stop it. Like, for instance, if you were just starting off, right, and you saw this right here, and you drew it from here to here, right? Price, what did it do? It came up to the 38.2. You would have been like, oh, that's a solid move. We got this bearish candle. You could have took it. But then you started to see this. You saw these bearish candles. Oh, damn, price is going down even further. Let me move it down some more, right? You would have bought it down here to the bottom of this candle. Now you got a much more significant area, right? You see this retracement 100%. You're not taking that trade. That's letting you know what's going on. But if you look, just use a fib and go back in the past and just mark up stuff. If you mark up, you know, like back here, just start looking at this and just start marking stuff up, like from a daily perspective. Like, look at this. retraces to the 38 on a daily level. You know what I mean? Like this is solid. This is solid. Like Fibonacci is a tool you want to understand how to use and use it to your advantage. Like really use it to your advantage. Not helpful. I love all the tools that are available. Is there a difference between EMA and MA? So there is a difference. So an EMA is an exponential moving average, and a MA is like a simple moving average. So a simple moving average is more so, I believe the difference is it takes the past 20 days and then divides. It does something where it's dividing each day's price, and then it gives a point on the chart that marks that point. The 20-day EMA is a little different. Now, as far as the differences, I know it's all about division and taking current price and then it marks a point. Some of them might use, volume, like weighted volume as well to kind of give it like an extra confirmation. But I know when you're using moving averages, just use the simple moving averages. Literally, the simple moving averages is all you need, and you'll see price respects it. Like price respects the simple moving averages, and it moves along those averages. There's the 50, the 8 for the strategy that we have, the exclusive strategy within, stocks rising. A 20-day moving average, is also solid. Like for instance, like if I change this to 20, look how it changes this blue line. See that? So now you got price breaking out above, and then it's like pretty much just hovering along the 20 until you have something like this happens. Breaks below the 20, taps the 20, and then starts to break below it. Breaks above, like we got this downtrend taking place. Like you can just experiment with them. Experiment with them, change the time frames, look back in the past, see what's happening, see how prices are reacting to like these different time frames or different moving averages, and just gauge it. You know what I mean? Right now I'm working on a little ebook that I'm putting out. It's about 60 pages worth of content for you guys to just digest. It's literally like a beginner's guide of just the terms, definitions, things that you need to know, chart patterns. It's like a book that you could pretty much print out at your disposal and keep it right next to you while you're placing trades to kind of just gauge, all right, like what are you looking for in the market? I talk about the indicators, the moving averages, RSIs, MACDs, Fibonacci retracement tools. I talk about, candlestick patterns, chart patterns, just the overall market in a nutshell, like when the overlap is between time frames and such. So there's a lot of useful information that's in this ebook. I'm pretty much done with it. I'm just piecing it together to make it look good. I will drop it on May 1st. May 1st, of course, all of you guys are going to have straight exclusive access to it. And then, I'm really going to start promoting it to really get more people engaged in Forex trading and wanting to trade with us and join our organization. So if you guys have any ideas, any of you guys are good at marketing, social media marketing or any of that nature, I would love to talk with you, sit down and kind of, figure out a way to kind of run some ad campaigns to, gain some traffic to, just kind of hyper target an audience that would be engaged with Forex, essentially. But outside of that, that's just a little side note. Do we have any questions whatsoever about Fibonacci, what we talked about at all? Any additional questions? Mm-hmm. All right, I take that as a no. We sure? No more questions. We about to end the call right now. No takers. All right, cool. So, there's still 10 participants on call, man. You guys are the soldiers of the organization. Shout out, kudos to each and every one of the 10 participants still on the call. For everybody else that joined, the 41 participants, thank you so much for hopping on the call. This is recorded, so, it's going to be dropped in the group once it's finished. And I really respect you guys. Thank you guys for everything, all the questions, paying attention, listening in, being engaged. Yo, let's tackle this week. Let's get this week. But I'm going to give you your time back now, all right? You guys have a great night. No problem, you guys. No problem. No problems. Name on GroupMe. Anil Victor. So it's just ANILVICTOR. You could probably also look for it by Yama Trades, YAMATRADES. Either or, probably pull it up. But you guys have a great night, all right? No problem, no problem, no problem. All right, signing out. Yama out.